Hey everyone, welcome to Price and Volume Basics. And to start things off, we've got one open high-low close bar, which can represent the price action of 5 minutes, an hour, day, week, month, or year. But the higher the time frame, the more significant this bar becomes, and the more significant the close is of this particular bar. And we basically assess the close using the closing range, which is the close minus the low divided by the high minus the low. So basically this area divided by this area, which is the range from the high of the day to the low of the day. And I view each of these bars as basically a match of tug of war between the buyers and the sellers. So the buyers are trying to pull this close up towards the high, and the sellers are trying to pull it back down towards the low. And where this close is, so the closing range, represents which was stronger on that day, the buyers or the sellers. And it's also important to keep in mind that volume adds weight to what price is doing, because the higher the volume, the more likely institutions, which are the driving factors in the long run of the stock's trend, the higher the volume, the more likely it is that they're involved. So here we've got ZS in 2020. It had a gap up on high volume, a strong closing range on this day and this day. And these 2 days were on very, very high volume if you look at this moving average of volume. So it's very likely that institutions were involved here. And after these 2 strong days, the stock consolidated for a bit, but then went on to double from this point, likely because on these 2 days, institutions were accumulating supply, and they continue to do so throughout the next weeks and months. So volume should also be considered along with this closing range to basically identify how strong that day was and basically who was stronger, the buyers or the sellers. And here we've got a low closing range example, and this is basically the same thing. We've got AYX in 2020, but on these 2 days, the volume was very high, so institutions were likely involved, but we had very poor closing ranges near the low on this bar and this bar. And this basically marked the start of a decline from the 130s all the way back down to 75 and then to 80 in a longer term basing period. So keep in mind that low closing ranges on very high volume could be a caution sign if you're holding stock. And another thing to keep in mind is also how tight the price action is. So here we have a strong closing range on high volume, so institutions are likely in control, and we had a strong close, so likely the expectation is that we continue higher from this point, but we don't have a follow-on day. However, we do have very tight days here, inside bars with tight price action, indicating that institutions are accumulating stock and nobody really is selling. And from this point, the stock went on to increase once again. So even if you don't have a follow-on day on volume with a strong closing range, this is also very constructive price action. And similarly here, we've got an example of tight action on low volume, Tesla before a strong breakout last year. And basically, once again, institutions are accumulating stock. There's a subtle sign of accumulation. And even the down days are on very below average volume. So there's no real sellers out there. So even though there's a pretty poor closing range, it's below average volume. So it's not too significant. And if you don't have a position, you want to look out for price action like this, basically the stock going sideways on very low volume, because that can really lead to a strong breakout like we saw from Tesla in 2020. Moving on, we basically have to consider what is above average volume. So there's basically 2 main ways to look at this. We can look at the moving average, so the 50-day average volume. If it's higher than that, that's above average. If it's lower than that, it's below average. But we can also look at how the volume is relative to the past 5 days or 10 days. And we basically call these pocket pivots if the stock is up on higher volume than any volume that is down of the past 10 days. And we'll expand on that in a future module. But basically, you have to remember there's 2 main ways to determine above average volume, using a moving average and also comparing it to the recent bars in the stock's history. And moving on, we also want to talk about breakout failures. So on this day, we had a move towards this pivot on above average volume, but on the next day, we move up and then completely reverse on very high volume, higher volume than the breakout attempt. And basically, it's a huge expectation breaker because from this bar with a high closing range on high volume, we expect the stock to continue upward from that point if institutions were behind that push. However, this really shows that institutions instead were using this as an opportunity to distribute stock, and we see an expectation breaker, and at this point we don't want to be involved in the stock any longer. And lastly, we've got relative strength. So relative strength is a concept we'll expand upon in a future module. But just as a brief introduction, there's many different ways to identify relative strength. And one of those ways is closing ranges on a weekly basis during a correction. So this is NVIDIA during March of 2020. The market was falling apart, and this stock actually held up much stronger than most, as you can see from the closing ranges on this week, and this week. We finished well off the lows, indicating that institutions were supporting this stock. So even though it was down these weeks, it was kind of holding up much better than the rest of the market, as you can see from the relative strength line here, which was in an uptrend during the correction. So strong moves and closes on a weekly basis of 40% or more is a sign of institutional accumulation. And once the overall market resumes an uptrend, that pressure can be lifted off the stock, and the stocks that were holding up the best and being supported by institutions can rapidly increase in price, which is when we want to be involved. So in terms of price and volume basics, we talked about the closing range, where the stock finished between the range of its high to the low. We also talked about expectation breakers. Did the stock meet our expectations from the closing range and volume? And if not, how are we going to deal with it? For instance, we covered breakout failures. We also talked about considering price action and volume together, because volume adds weight to what price is doing, because the higher the volume, the more likely institutions are involved. And we discussed how tight price action on low volume can be a sign of institutional accumulation. Finally, we covered relative strength, basically using the closing range to determine whether during a correction the stock is being supported by institutions. So that is price and volume basics. I'll see you guys in future videos.